this is a perfect time. Can you explain to the layman those three concepts: backtesting, paper trading, and then live? What does that mean? If you had, I would say explain it to your grandma, but she sounds pretty smart. So if you had explained it to my grandma, how would you explain that?
Backtesting is just basically off of historical data, what this model would have done back on these dates that you set. So you have to set certain dates. It could be from a year ago, 2 years ago, the prior month, you name it. Paper trading,
So you come up with a new trading model where you're like, okay, I want to put this factor in there. Let me see how it would have done from in the calendar year 2024. And you run that and it comes back and says, all right, you would have been up 600%. Okay, that's a good piece of information.
Huge.
Then that's really helpful. That means you know, okay, I would have done really well last year. That's huge. Then you paper trade it, which means you do what? You take that same model.
So yeah, if it would have done good, especially if it does good in the bear market, it's a good model. And then paper trading is just a term for live trading with simulation. So it's basically live trading actually happening when it's happening in the market. It's just fake money. You're not risking your own money. So you want to set it to a $10,000 account to simulate what you would do. I would highly recommend paper trading before deploying live.
Right. Right. Although how many people don't do that?
I don't think many do that.
Right.
But
they backtest it. They say, let's go. They put the money on. And then they realize, maybe this didn't do what I hoped.
Historical is good, but what you could have with historical, this could be the issue, is what you have overfitting, because you already know what's going to happen before it happens. So you're just tweaking for what you already know is going to happen, versus real trading is kind of predicting what's going to happen before it happens. And that's why I would certainly run it on paper trade for X amount of time before.
How much time would you paper trade?
Honestly, I would do a minimum of a week.
Okay, gotcha. All right, so a week goes by, you put some fake amount of capital, and they literally has to try to execute, with the volume constraints and all these things that might happen on exchanges. And after a week, you see how it did as a trading model. And you want to see that it has similar results to your backtesting.
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
Yeah, it should have similar or better results, but live paper trading is the best you can do until you're truly in the trenches. Like live simulation, like anything else, there's nothing closer to the real thing than the real thing. And then you go live. Some people, if you're really confident, if you have a great strategy, you go live with your full book. If not, do a percentage of it. And then, see how it goes. You have a kill switch if you decide, I don't like, maybe I made too much, maybe I lost it. You can kill it off on your own. We will have a mobile app soon enough. We have it internally, but we're not ready to release it yet. It works great.
Really?
Yeah.
Why would you kill it if you made too much? Scary.
I don't know. I've learned the hard way that sometimes, and I'll say my favorite quote, bulls make money, bears make money, pigs go to slaughter. If you make a certain amount, you may want to turn off your model and let it breathe. The market may revert. You may not be so lucky. You never know.
Yeah.
Sometimes it's good to just be happy making. Some of the returns you can make in crypto are wild. You'll be happy.
What are some of the wild returns in crypto?
Oh boy. I started off in 2016 when I was at Harvard. I turned a few $1,000s into a good few million in the first couple of months.
Months?
Oh yeah. Those days are long gone.
Why are they gone? Because there's less opportunity? and there's less people in there arbing the differences.
You're not going to see a coin go from like 1 penny to 50, 60 cents in a matter of days for no reason. And as the market matures, yes, you won't have the fun, crazy returns, but I think it's safer. You know, every time there's some crap that happens, you have some person, or the market, is like, we're going to expect this and this and this from a new project to succeed. And I think even, you know, same thing with VCs, like that ideation stuff, we don't necessarily believe in that anymore. I want to see a new project. I want to see a minimum of an MVP. If not, I want to see the tech working. You know, we're not going to release our coin until our tech is, you know, our tech works already, but, you know, until we have X billions in volume, we want everything to be, you know, working perfectly, and all of our users and token holders to be getting, dividends, basically. I don't know, staking. Staking in crypto, but effectively dividends for holding the coin.
Okay.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.